An analyst at JPMorgan currently holds a price target for Tesla that is 78.5% lower than the current prices. Um, that came to our notice um, by this piece on Market Watch. It says analyst Ryan Brinkman at JP Morgan raised his stock price target by 7.3% to 295, but that was still 7.85% below current prices. Brinkman's target remained the lowest of the 32 analysts surveyed by FactSet. The price target increase follows Tesla's report on Thursday, that was Thursday last week, that it delivered 90,650 vehicles in the second quarter, well above expectations of 72,000. Brinkman said that the deliveries data led Chief Executive Elon Musk to imply Tesla's second quarterly report, due out on or about July the 22nd, 2020, could produce a surprise break-even result. But he cautioned investors that any substantial better results could include items that are one-time or somewhat one-time in nature, such as zero-emission regulatory credit sales or the release of deferred revenue associated with autonomous driving features. Brinkman reiterated the underweight rating he has on Tesla for at least the last 3 years, while citing lofty valuation coupled with high investor expectations and high execution risk. Our underweight rating considers notably investment positives, including a highly differentiated business model, appealing product portfolio, and a leading edge technology, which we believe are more than offset by the above average execution risk and valuation that seems to be pricing in a lot. Brinkman wrote in a note to clients. Of the 32 analysts surveyed by the FactSet, 12 have the equivalent of 12 sell ratings on Tesla, while 11 have the equivalent of a hold and 9 have the equivalent of a buy. The average price target is $704 or 43% below the current prices. So you have it there. The average price target is of these analysts is currently 43% below the current prices. So we'll just come back here and have a look at the chart of Tesla. We're currently using a tool available on LCG Trader. It's a UK-based platform. So we have plotted here the 10-day moving average, the 20-day and the 50-day. So the last time Tesla fell below any of them, and indeed the 3 of them was not very long ago, around June the that was June the 25th. That was the last time Tesla pulled back, or rather it was trading very much. There was a very good consolidation here for the whole of June, and by the end of June the 24th, that's probably the last time in 1 month or thereabouts he had its lowest point. But we're not going to call that a pullback. We're not really going to call that a pullback as such, but obviously Tesla is trading at its high of highs, I think, for sure. And in recent well, okay, let's say in recent weeks, it hasn't really corrected. So um, we have seen what the analysts are saying over there. So people have to be cautious. And there's also every reason to be optimistic, because you can see the short percent of float is 10.27%. So what it simply indicates that 10% of the shares are sold short. These guys are the people who hold these positions are the people who are skeptical. So even though it's very close to what is considered the cushion, which is 12%, but I'm not going to say this is poor. It's quite healthy. It's good enough, is ample enough. So we can go on to say that there is a substantial amount of skepticism towards an equity that is Tesla, that is has continued to outperform, has continued to deliver beyond expectations. So that is a very good balance, because this skepticism is what is going to, feed into the positives. So, yet at the same time, this is not to say that we are not by calling for caution doesn't mean we are in essence saying we are negative. We are just being cautious. So just keep observing. We wouldn't advise anybody to really jump in now. Just keep observing and wait for a correction, wait for a pullback, and if possible, wait for a consolidation at any point in time. If you're not going to get a pullback, just wait for some sort of consolidation. The market for electric vehicles is heating up, so Tesla is aware of the competition. It's ahead, and it will continue to deliver and make sure that it remains ahead. And people are also positive about it. It has a cult following. It has everything going for it. So it also has a healthy amount of skepticism in terms of real money, in terms of tangible skepticism. This is tangible skepticism. We're talking about 10.2%. So we're talking about 24.5, about $25 billion worth of skepticism. So it is there's a healthy amount of balance. There's a healthy amount. We just have to give it. We just have to call it a cushion. There's a healthy amount of cushion here, and on the other hand, we have the skepticism from the analysts, who are also not as bullish. They are, on the average, quite bullish, but not as bullish. Their price target is still 43% below current prices. So when you match all these things, you can see there is a very good balance. So what is left now for people who want to join in is to just ensure that they join in when there is a pullback, or when there is a consolidation at current levels. So this is the much we can say, and we have covered Tesla for quite some time now. We'll continue to do so. If it means we're going to cover it so many times in the day, we'll do that. So thank you for watching this video. Please subscribe to our channel, support us through Patreon or PayPal, and also sign up on our program, Equity for Keeps program. We here on this platform, we help you to make very, very good use of your money. Sign up and see what's going on. Once you sign up, you get up to 10,000 shares of our company, Eskins for Keeps Limited. All you need to do is just follow all that we have on these tabs, and that is how you will grow your equity. The equity we're giving you. Your shares will not be, your money will not be at risk. You're not even gambling your money. You're not risking your money. You're just being smart with your money. Okay, thank you very much for watching this video again. and subscribe to the channel, sign up on our platform, and support us through the main various means we have available. Thank you.